Today, I'm joined with my partner, Dalton Cole at DigUp, and Christian Pellegrino at Alpha FMC. And Alpha FMC is a consultant who works with traditional market hedge funds and traditional market financial institutions. And Christian is he's the head of digital assets over there. So, looking forward to getting the lowdown on what the traditional world is up to when it comes to digital. So, Christian, thanks for joining us, man.
Yeah, thanks for having me. Excited to be on.
Well, we can just start off. Would love to, hear about your background. What got you into, making the dive from, TradFi to moving into crypto full time, and then more about what you're up to at Alpha FMC.
Yeah, for sure. So like you said, I'm a director at Alpha. In our New York office, I also lead our digital assets business. Joined Alpha in 2018 out of undergrad from Stern. Large part of the first 4 years of my career at Alpha were focused in investment technology. So working with portfolio managers and traders to understand their operating model, help them select new technologies, and then deliver that transformation for them. I then had the opportunity to join CoinFund, a digital asset investment manager with liquid and venture strategies. I joined there in a project management capacity to do some portfolio management, selection, and implementation work, and to build out their investor servicing portal. And what I started around that time was we were getting a lot of inbound from competing hedge funds and broader asset managers around operational best practice and technology infrastructure to get exposed to digital assets. So saw a big gap in the market to provide traditional consulting to crypto. And then in parallel of me being a coin fund, Alpha was getting a lot of inbound from our traditional client base, of which we work with 85% of the top 100 asset managers by AUM globally, around the topic: what is digital assets, what is blockchain, what is crypto, how should we get involved here? So naturally saw a good fit to come back and lead some of the work here. So at Alpha, like you said, management consultancy that works exclusively with the asset wealth management industry, and that's across the entire value chain. So investments, distribution, operations, data, and then that's also across the entire value chain from a project perspective as well. So that's upfront strategy work, operating model design, selection and evaluation of different service providers and technologies, and ultimate technology delivery. So that's also like project management, business analysis support alongside technology delivery. So we're working with two sets of clients: crypto native funds that are looking to scale their operating model as they get more institutional capital this cycle, but also the traditional asset management folks in terms of what does this asset class mean, and then how do we get involved from a tokenization perspective.
So what does a typical engagement look like? Like if a fund is like looking to engage with Alpha FMC, like is there just like a scoping or to kick it off, or do most people already come across knowing exactly what they're looking for just based off of you guys' reputation in the space?
Yeah, so ideally for us, it's we partner from upfront strategy all the way through to technology delivery, right? That's our ideal client engagement. That being said, right, clients come to us at different points, given, like you said, Dalton, like our reputation in the market, right? Like we're very much like a referral based business where people don't always have the best experience with consultants. So when they hear that someone's focused on the space and has good expertise and good people delivering, it's like, oh, you're a peer is trying to solve for this issue. Oh, we worked with Alpha; they were great.
Right.
And that's why clients come to us, right? Because we are the subject matter experts. We have a lot of people from industry come in to join the firm to help, really spearhead our initiatives. So we have that expertise of the industry plus the hands-on delivery of what clients are actually trying to do. So yeah, ideally clients come in, right? They say we have this problem, we scope out their needs from a timeline perspective, and then how many resources we could provide to help support them.
I know you mentioned 85 out of the top 100 or so of the largest asset managers by AUM. Do you have numbers for specifically on the digital asset side that you could share on like how many funds or anything like that?
Yeah, so we've done about, I think now we're close to 10 projects in the digital asset space, which I think kind of is a differentiator for us from probably our peers, right? I think it's a very nascent market and something that, we're able to like tap into like our traditional consulting capabilities, but also like the experience that I have from CoinFund and working in digital assets, but also just like the expertise that we're able to build. So we're working with one of the biggest crypto native funds at the moment, doing like a middle and back office target operating model design and technology implementation for them, which has been great. We've worked with some of the other biggest crypto funds in the world out there too, in terms of data governance and data management. That's a very hot topic in the industry. So yeah, I'd say about like, I think we're close to 10 engagements total with some of the biggest crypto native funds out there.
Awesome. Congratulations.
Yeah, thank you.
And how do those like, I mean, obviously I expect like the engagements to be like quite different with a crypto native group versus like a TradFi group who's trying to get involved. It's like totally different animals. But can you kind of like contrast those, kind of like what their questions look like?
For sure. So on the traditional asset management side, right, and of course we've worked with or actively working with the biggest firms out there. Some of them are very much spearheading digital assets initiatives, like the BlackRocks of the world, the Franklin Templetons, the Fidelities, etc., where they're not necessarily looking to us for digital asset subject matter expertise or advisory. It's how do you help us deliver our initiatives from like a internal capacity perspective. Then there's the broader asset management community that don't necessarily understand what it means to invest in crypto as an asset class, but also use tokenization to distribute and manufacture exposure. So those questions or conversations are much more like C-suite level education about what peers are doing. How do they think about a strategy and a timeline for deploying that strategy? Are there certain catalysts that they're waiting for in the market to actually get involved? Are they more in a wait and see mode? What does the regulatory landscape look like? So that's more so on the traditional asset management side. The crypto native side, very much like we're not going to advise them on on digital asset subject matter expertise, right? They're coming to us purely for how do we institutionalize our operating model? How do we get off of Google Sheets to more, third-party platforms? How do we think about due diligence of those platforms? And then ultimately, like, we run a very lean team. Can you help us deploy that technology?
Nice. So, I mean, there's like a lot of different topics there, right? That are totally like completely different engagements, completely different sort of like payment. So like you mentioned the regulation, and then you mentioned like tokenization for distribution. It's like when you're going to like a TradFi group, are they kind of coming to you and they're just like, here's all these things that we're thinking about, we want to distribute with tokens. What does that mean for, or is it more like they're coming to you with like one targeted, like, we need some clarity on where the regulatory environment is. We need some clarity on what the heck we need to do to tokenize a fund or something like this.
For sure. Yeah. I mean, of course, it depends on the type of manager you're talking to and like what their strategy looks like. Usually the conversation starts with what's going on in the market, right? Like we've heard BlackRock's launched Phill. We've heard that KKR has tokenized a fund. We've seen the success of the spot ETF. So like, give us the landscape, talk to us about all of it. What are some of the use cases that you're seeing other asset managers adopt and like seeing a lot of traction in the market? What are the benefits versus like what are the hurdles of adoption there? And then once we layer in that like foundational conversation, it's like, okay, this is what we're super interested in. We're super interested in potentially bringing ETFs on chain or bringing equities on chain. Talk to us about that. Like, what are some service providers in the market that could support that? How are peers thinking about that, just as an example? Or it's, we've seen the success of the spot ETFs. We don't want to compete in that market, especially from a Bitcoin Ethereum perspective. We see some opportunity elsewhere. Maybe it's index funds. Maybe it's, different types of tokens that, are pending some approval. Maybe it's leverage, right? So it's more so like getting the foundational, like, conversation of what the market's doing, and then we can like really start to tailor that discussion towards individual firm strategy and how they see themselves competing on the traditional side of the business and how that translates over to digital assets.
What about the stable coins? What are people saying about those in the TradFi world?
Yeah, I think a lot of people are looking to see what happens with the Genius Act, right? I mean, it's been really interesting to follow, right? We had David Sachs come out saying that there's large bipartisan approval for the bill. I think we're still waiting to see like the Senate process play out. So I think that's going to be like just people are waiting and trying to evaluate what that means and the impact, and then I think we'll see people come to market with some products. I think I think it was last night where Bank of America is looking to partner with I believe it was JP Morgan to roll out potentially a stable coin, right? So like I think the Genius Act and the broader regulatory landscape will provide a lot more clarity for people to re-engage. And I think that's what the difference is between the traditional asset management community and the crypto native community. Whereas like traditional asset managers very much need to like have a clear path to bringing products to market and not have to face regulatory pushback on all that. Whereas the crypto native community, like, they understand digital assets. They know that over time that will come. Like, they're very much willing to engage and don't have necessarily that large barrier from a regulatory perspective.
And what does that like? So I like for the crypto people, I think stable coins generally mean like yield, right? There's like some way we can go generate dollar denominated yields. What does that mean for like these TradFi people? Is it still yield? Is it like cross-border payments? Like what are they kind of most interested in? So when it comes to stable coins, in like the crypto world, the obvious use case is yield, right? That's what people are looking for, is a dollar denominated yield source. In the world of like the TradFi guys, the traditional market, I think the traditional market hedge funds especially is what, a lot of people will be curious to hear about, because when we think about the banks, I think it's like largely pretty clear now. It's like a cross-border kind of thing. It's like potentially a payments kind of thing to get around some of like the traditional payment rails and like the costs associated with settling those transactions. But with the hedge funds, what are they sort of like most interested in on the stablecoin side?
Yeah, I think especially like on the crypto native front, I think being able to use stable coins to generate yield and engage with more traditional products it's a significant on-ramp and unlock to decentralized finance for them, right? So think about the world where there's a tokenized private credit fund and a crypto native fund has a ton of excess cash on their balance sheet where they can go and generate more yield as opposed to just keeping that in a traditional money market fund. On the traditional side of the world, it's more so, is there operational efficiency for helping settle all of our transactions in stable coins, and think about it from that perspective, especially like from a tokenized money market perspective, right? Like, how do we save basis points on transactions and save operational costs of supporting these funds, which is straight alpha to our bottom line and alpha that we can pay out to clients, right? So I think they're seeing it as an opportunity for them to generate more yield and realize operational efficiency from the transaction settlement perspective and the reconciliation perspective.
And when it comes to like those operational gains, are there any kind of like numbers around like what that actually means for these people if they were to like put stable coins on their balance sheet, or maybe like what they're looking for in terms of like some kind of total basis point savings?
Yeah, I mean, I think I was talking to one manager that has tokenized money market funds, and I know it's a little bit different from the stablecoin example, but the efficiency they've been able to realize is almost like 99% per transaction from their traditional platforms, right? So that's very significant. And what you're talking about, when we scale to trillions of dollars of these assets being traded, that's real money. That's hitting straight bottom line.
And just for my sake, like, do you have any idea like what the what those costs were like, before that potential savings, or kind of like what that looks like for some of these operations?
Yeah, I think there's a lot of efficiency in the transfer agency world, being able to essentially, or you're settling those transactions instantly as opposed to the traditional settlement rails. And also in the traditional service provider world, right, there's a lot of manual processes, reconciliation that's happening in the background, even if you're outsourced to somebody. Someone is still doing that work. I think with blockchain, that's all pretty much straight through processing, right? It's the nature of the blockchain. So that's where it gets really powerful.
Yeah, and so these like, like I'm just thinking about my background in traditional finance, like the ops desks, like these are generally some almost like the most like, conservative people within the organization are going to be on the, handling the back office stuff, and I mean, because I mean, if something breaks, it's like it's a big deal, right? And so what are these guys like saying? Like, what are their, okay, so they want to use stable coins for, settling trades somewhere in the pipeline, like what are the things that they're asking, like, and what are like the primary concerns that they have from like a risk perspective?
Well, one, it's definitely regulatory, right, which we've talked
Mhm.
about, but that's going to get ironed out soon, hopefully. I think the second is really around how different it is to be hands-on on chain as opposed to the traditional rails, and like trying to understand what it even means to operate on chain. I think that's a very tough concept for like legacy operations folks to get around. Like, oh, what do you mean we could self custody this? What, what is it? We have to diversify custodians, right? Like, what does that mean, right? It's just a very different way of thinking. We have to 4i approval of transactions, signing transactions, right? All these different things. Like, it's just very, very different from what happens in the traditional world. So I think there is a bit like of an educational / like change management element of that, where it's like, hey, right, this is a very new process, emerging technology. We need to get our teams, comfortable with this type of exposure and this type of operational management at this point. So I think those are some of the hurdles. And then also just like integrating that with your traditional service provider world, right? Like not, some are, right? Like we're seeing like BNY Mellon make big strides in this space in terms of like adopting digital asset capabilities, but not all of the traditional TPAs in this market are doing so. So it's like, this is how our traditional financial infrastructure rails work. This is how we think our digital assets rails should work, but that very much is happening in parallel of each other, not together, right? So it's like we really need to try to marry those two, and I think that's where we see true adoption, is the convergence of traditional markets and digital assets. I don't think DeFi completely revolutionizes what we're doing in traditional markets. I think it's very much coupling each other, taking the best of both worlds and improving the financial infrastructure.
Do you ever get pushback from some of these folks? Like you're going into a meeting with somebody and they're just like really pushing back hard against using, crypto for anything. And then, I mean, heck, maybe it even sort of is, maybe it's even like a threat to some people, right? Because maybe some people sort of like rely on the, the traditional rails just for, for their livelihoods, frankly, or right.
Yeah, for sure. I mean, we usually don't get the meeting if that's the case, right? We never get into the room. But it is a threat in terms of once you're starting to see the operational efficiency, like numbers come to life, and seeing that blockchain technology reduces the amount of hands-on operational management that takes place in traditional world, plus like the reconciliation efficiencies you see, right? That can translate to a significant amount of savings for asset managers. And what are asset managers trying to do, right? They're competing on cost and trying to, generate more revenue from their clients, right? So like if this is an opportunity for them to widen that spread, it could make a lot of sense to adopt. But yeah, naturally that is a threat, right? I mean, similar conversations to what we're having on the AI front, where, trying to assess what that impact is in the next 5 to 10 to 20 years. But once again, I think both those conversations come to life in terms of we need to adopt this technology to stay competitive, and this could very much benefit our business. But there are some inherent risks to that, and we need to understand that, and we need to understand where it makes sense for us to play in this world versus not.
And so I guess just to kind of like put a bow on what we just talked about here, in terms of like the gaps for these organizations, engaging with crypto, the infrastructure gaps, it sounds like regulation is number one, just like some kind of regulatory clarity. And then number two, it sounds like is like basically them then figuring out where this plugs into their existing processes. Is that kind of like a good summary?
For sure. Yeah, I think every organization in the traditional asset management world very much, everyone has created somewhat of a niche for themselves in terms of trying to compete against commoditized products. So as firms start to really establish themselves in the market and bring their strategies, like how can this type of capability bolster our competitive advantage in the market? For some clients, that might be nothing, right? We don't want to get involved in this space. We don't want to have any exposure. Maybe we'll use it from an operational efficiency perspective down the line, but we're not looking to offer digital assets products to our clients. Some people are saying we think we can steal market share from other asset managers if we start to offer this type of capability to clients. And then all of that in the background is, well, let's see the financial markets legislation around this with the SEC, and let's really see that come to life, where we can know how we can engage with this and how we can start offering this to clients. So yeah, that's where we are, I think, in the journey. And we always talk about regulatory uncertainty, but I to me, it's almost like one of the biggest unlocks out there. Once we have the rules of engagement of how the U.S. can really play in this market, I think it's going to be parabolic levels of adoption.
And so on that note, like how has the appetite shifted over the last, I'll call it 12 to 18 months?
Very significantly. I mean, as part of this new administration coming in, sentiment was much, much higher just on the prospect of a pro crypto friendly administration coming into the White House. Our business is very much driven on price sentiment, right? Like the more conversations and the more engagements I have usually coincides with where the market is. That's when clients have excess cash to spend money to invest in initiatives that they've put off while they were, trying to fight the bear market. So for me, that level of interest very much peaked around the election into the early part of this year. I think now with all of the tariff news that comes out on a day-to-day basis, right? It's very much, I think, in a wait and see mode, as well as some of the regulatory bits are playing out in parallel of that. So once we start to clear some of those headwinds of just like the uncertainty around what the tariff impact is going to be to markets, which I think we're starting to see a bit of, plus we see this Genius Act really come through and we see the SEC making some pretty significant strides, I think that sentiment comes back very, very powerfully.
Yeah, good call. So when you talk about adoption, kind of going parabolic, when I think about it, that doesn't necessarily mean that like we're just going to see a rip in all the coin market cap top 50. And you had kind of mentioned before of like, DeFi hasn't kind of revolutionized things. They've just kind of like added an efficiency layer on top of like processes that already existed. So when you talk about adoption, like what specific are you just talking about tokenization? Are you just talking about like stable coins and just these blockchain rails? Or are you actually talking about like existing tokens that are being traded now? Like everybody floods into Solana now, or like in my mind, it's more of no, we've kind of reset mentally, and now we've got a little bit clearer of like what the baby steps are to get towards these efficiency gains that have been proven out by all these experiments, but it doesn't necessarily mean that those experiments that have been run through even Bitcoin or Ethereum or Solana, like those may not be the ones getting the adoption as much as like the technology as a concept would be.
Yeah. So sorry, I had some feedback there. Let's take the traditional asset management community first from in terms of adoption, and then we get more into like the actual crypto native type of DeFi exposure. Mm-hmm. I think once this regulatory unlock happens, and quietly in the background, which I don't know if too many people realize, I think there's over 75 ETFs pending approval from the SEC from traditional firms, right? So there are a lot of listed products out there that firms want to provide exposure to, right? That's different types of spot ETFs. That's also levered ETFs and potentially indexes, etc. I think once there's regulatory clarity, we are able to get exposure to the largest pools of capital out there to invest in digital assets. Right now, there are long investment allocation reviews and processes in place for them to get comfortable with this type of exposure. And where does that probably start? That starts with investing in Bitcoin, probably right. Also with Ethereum. Those are probably the top two areas where we'll see a lot of flows from that type of community, which is a very different sentiment, I think, than what you hear from the crypto native community, where it's Solana is the coin of the cycle. Everyone's right. Building on Solana. Kraken bringing ETFs, equities on Solana, right? So I think it's just different ways of framing the conversation. That's what the traditional asset managers and the allocators are looking at versus like the actual crypto native community. I think once all of that is really started to figure out, people are, as most of us, right? You start with the Bitcoin and Ethereum thesis, and it's like, oh wow, what else can we do on chain, and what does that mean for our business? That's where I think we start to see those flows really be powerful, and then I think to that point, that unlocks tokenization, right? We have a lot of firms really doing that, but now it's okay. Wow, we have clarity here. This firm is doing this. They're realizing that type of efficiency. They're saving this type of money. Why wouldn't we do this? We should do this. Let's engage in this, and then the network effect of that type of adoption just really scales.
Yeah, I think what's hard for me to foresee is, a lot of the efficiency gains and these benefits don't require the existing, I guess, players in space. Like when, these big TradFi players want to get involved and they want to do something on chain, or the big banks or anything like that. Like they don't really necessarily benefit as much from like globally decentralized networks. Like if they wanted to spin up, like if you had a massive bank like JP Morgan that just partners up with some other big banks, like, no, this is our network. This is the US bank blockchain. Like spinning up that tech stack would not be exceptionally hard. I mean, it's open source code. They could fork and tweak and throw a team on this and, 20 million bucks, and they could have something pretty robust and total control over it, as opposed to having to rely on, these globally decentralized networks that, while they're established, they open up a lot of kind of vulnerabilities on, you have to build all this additional infrastructure to do your KYC and all your AML and all that stuff, as opposed to them just saying, oh, we like how that worked, we're going to do it ourselves, and it's going to better suit our needs, as opposed to trying to adapt their needs to be solved by Bitcoin or by Ethereum or by Solana. Like it's just, to me, so much easier for them to say, okay, great proof of concept, we're going to run with it, and then that be it. That pretty much they win in that case, in my mind, just because like that's kind of where the value is delivered. It's between the user and the bank. Who gets to integrate in the point of sale systems? It's going to be the big banks. Who's going to be able to do all this stuff? And so they have a lot of leverage over this. And I don't see a clear path to where they say, we want to run everything on Bitcoin Lightning, when they could do it themselves for, like, in my mind, not a crazy expensive cash outlay compared to what they pay for other things.
Yeah, it's a really good point. I think people don't appreciate enough how meticulous and careful these large traditional institutions have to
Right.
be when bringing these
Right.
products to market. And selfishly, like from my perspective too, like I would love to see this adoption happen where it's like, okay, everyone's going to start operating on chain, ledgers are on chain, payments between banks all on chain,
Hmm.
but they are spending a lot of time and resources really doing their due diligence in terms of how do we do this in the most secure and regulatory friendly way, that minimizes all the potential risks to our clients because they can't afford to make those mistakes.
Right. Right.
Well,
And
I
from
don't
like a
know.
technologist's perspective, it just seems like building from the ground up would be a lot easier than try to, I guess, create all these adapters to the existing system to meet those needs.
Correct. And I think they're, I don't know if they're necessarily struggling with it, but it's a conversation they're very much having, like really trying to understand, like, given our business model and the way that we need to interact with our clients and with other institutions, does it make sense for us to build this from the ground up?
Right.
Our own private blockchain, there's a probably use case for that versus being on an Ethereum as an example.
Right.
It's a conversation that they're having, and it's a problem statement that they're very much investing a lot of time in trying to solve and make sure it's the right one for them.
Right. Yeah. That makes sense. Yeah. Just curious on your thoughts on that, because it's something I've been would love everybody to be using Bitcoin in the future, but for me, it's just tough for me not to imagine that, existing TradFi players don't just say, no, like this is what you got, because there's pretty good control over the financial system already, or
Yeah,
even
but
just
I
working with
think,
the Federal Reserve or something. Yeah.
yeah, I mean, I think Bitcoin though is more of like a escape hatch from those existing pipes, though, right? It's like a totally other thing. And do you, Christian, do you see um, interest around like Bitcoin products picking up? Like, do you see these TradFi guys like, oh, you know what? Maybe there are some, endowments or pensions who would want a, Bitcoin denominated yield product or something like this. And those kind of things are going on. What do you see?
Yeah, I think the first step is getting them comfortable with the exposure. I think
Mhm.
as they go through allocation reviews and their investment committees to get this type of exposure, it's where does this fit into the portfolio? And it's probably in that store of value portion that gold takes up at the moment or physical commodities take up at the moment. So it's how are we thinking about either one replacing our allocation to Bitcoin to gold with Bitcoin, or how do they kind of marry each other as diversifiers in the portfolio? So I think that's the first step, and some have done that, but a lot more to come. And then the second bit, and I think right, Coinbase has just rolled out a Bitcoin yield product or announced that they're rolling one out. there's going to be a world where there's so much Bitcoin on these firms' balance sheet or in their portfolio that they want to generate yield on it outside of just the appreciation.
Right.
So that's naturally the next step. But I think for them, it's very much let's get comfortable with adding it to the portfolio, and then over time, that's where the interest will come.
I mean, like MicroStrategy, for example, they're going to have to figure it out, right? Like they don't really have a choice.
Correct.
Yeah.
Correct. And I mean, the Bitcoin acquisition company trend that we're seeing here, I think that's going to only force the agenda even quicker because they're going to have to compete from each other. The Cantor example with Jack Mallers, I mean, they've talked about wanting to roll out more Bitcoin yield products and compete with MicroStrategy in that way. I think that's going to get really interesting. And what does that mean for Bitcoin digital assets? More interest, higher sentiment, higher prices, which then always drive a new demographic into the market, saying, "Wow, I missed out on this again." Now you're buying Bitcoin at 110,000, right? That's where it's really interesting.
I mean, man, it's like not hard to see a world where that gets really scary. Yeah, with like a spectacular crash. But I mean, yeah, it's like it's happening, right? Like, who was it? Was it Cantor Fitzgerald, and Tether, and then like I think one other organization kind of teaming up on. It's like a SPAC structure, right, or something like that.
Correct. Yep. With Jack Mallers. Yep. That they're rolling that out, and then Strive Asset Management as well, rolling one out where they're looking to acquire financial services companies with a lot of cash on their balance sheet and essentially turn them into Bitcoin acquisition vehicles. There is that massive risk, though, that I think MicroStrategy is going to have to respond to. It's what happens if they start selling Bitcoin? What does that mean, right? Like in an ideal world, everyone holds it forever and limited supply, but things do happen, and I think that is a big risk that I don't know if that's necessarily priced into the market yet, and I don't know if I have a great answer to it, but it's something I'm definitely thinking about.
Yeah, I mean, we'll see. We'll see. And so it sounds like generally though the interest from the TradFi crew is so far like less so on exposure to price risk on crypto, right? Price appreciation. More so, it's like all about like where are the efficiency gains from these rails.
If you asked me this question 24 months ago, there was no sense of decoupling between what investing in crypto is versus using blockchain technology. That has very much happened and very quickly. So I think there are a group of the traditional asset management community that says there's an opportunity for us to provide exposure to our clients and provide different types of digital assets products to do that. That's interesting. But I think a broader set of the community is we'll see where that lands. We're not super interested in that, but we are interested in using tokenization to distribute and gain new AUM and new channels that we may have not been involved with. Also, the impact of democratizing alternatives and getting more high net worth individuals access to these types of products without the high investment minimums in the traditional world. That's the second channel. And then outside of that, just from a fund tokenization perspective, it's can we use blockchain technology to realize that efficiency as the settlement layer for all of our financial transactions? And what does that mean? So I think, I don't want to say it's 50-50, but I think a lot of the community is more so focused on the tokenization element of it, while I don't want to say a quarter of that community, but less of the community is more so focused on bringing products to market for investing in crypto.
And how's the conversation around like private networks? Is that I think Dalton, you were kind of alluding to that earlier. Is there still a conversation around private blockchains going on?
Not in the ones that I'm having. It's more so who do we partner with to help bring these products to market, like the securitizes, the securrencies, the tokenies of the world, and then where do we see the most liquidity and what chains do we launch on as opposed to private versus public. I think that's more of the conversation now. That was very much a conversation, like I said, 24 months ago when they couldn't decouple those concepts. But I think the conversation has changed given the success of Securitize with Phill, and other products like that.
And so when we look at like Solana, which has had downtimes, you know, much less decentralized than say Ethereum. Um, does that have an impact on these institutions like making the decision to tokenize onto Solana versus Ethereum mainnet?
It definitely does, and it's part of the due diligence conversation in terms of where do they initially launch. But I think ultimately it's where are we seeing the most liquidity, and what chains do we need to offer liquidity on for our clients, and we'll launch there. I think it's much less of a world where they're only going to launch products on one chain. It's how do we be multi-chain and bring our product to market to access the most type of liquidity that we can. So that's the focus of the conversation, and that's how in the conversation that I've been in, that's how they're thinking about it.
In terms of liquidity, what about automated market makers? Are they like considering like Uniswap pools, or is it really just like let's just get a token and then I don't know, go to some centralized exchange or some secondary market?
Yeah, not yet. At least in the traditional asset management community, I think that ties into the part of the conversation in terms of regulatory. How do we engage with those types of automated market makers, as opposed to we know what we could do from launching a token and distributing that to end clients, but I think the AML KYC of that still needs to get figured out a bit more before they really engage.
Yeah, that makes sense. Um, so what else are we what questions are we not asking, Christian? What's like some of the other hot topics?
Yeah, I think for us in our business, it's very much been, and I know I mentioned this a few times now, but like the two verticals we operate in, investing in crypto as an asset class, the different types of products in market, and where clients want to differentiate themselves versus others. But then on the tokenization element, I think we've touched on a lot, right? We've touched on the success of tokenized products, the efficiency that's realized there, the channels that can be accessed to new clients with these types of products. And then ultimately, where do we see that broad level of adoption? And I think it's once regulatory really gets ironed out and there's clear rules of engagement for clients to engage in this exposure. I think it's going to be a very, very interesting next 12 months for us in this space.
Nice, nice. And okay, and so not trying to beat a dead horse here, but going back to the regulation, when these guys say like clear rules of engagement, is there like a checklist? They're like, this is what we need to see to then feel okay with engaging with this technology from tokenization state, like whatever perspective.
Well, I think it's changed, especially in the U.S. because with this new administration, there's less of a risk where the SEC is just going to go after a firm for bringing a digital asset product to market. So I think they're getting more comfortable there. It's like, okay, these are the things that we want to do. We're comfortable moving to the next step to deploy this type of product because there's less risk there. However, and the SEC has definitely talked about this, they're engaging with these traditional asset managers and the crypto native companies as well to understand what are the ways in which traditional markets can converge with decentralized finance and really bolster each other to improve financial markets, but to also protect investors. I think once there is, and I hate to say this, a bill or legislation in place to, just provide the asset management firms, but also end clients with this is how the SEC is comfortable with this type of exposure, I think that's when clients will really start to deploy in a meaningful way. So I don't know if it's a checklist in terms of like this step, click, okay, we'll do this, versus next step, okay, we're comfortable here, then we'll move our product to phase B. It's more so the SEC stamp of approval on a legislation that makes sense to govern this market, and then it's full steam ahead.
Got it. Got it. And are there any like global jurisdictions that you feel like are kind of like um, setting the pace for this stuff?
So we've seen various regions really take market share away from the U.S. and in the last 24 to 36 months, given, we've really lagged behind that. And a lot of the clients that we're speaking to are very much globally focused, right? So it's one, trying to understand what you can do in certain jurisdictions versus not, which is a bit tricky. We've seen a ton of traction in the UK in terms of fund tokenization. I think that's with Micah and the sandboxes there, where I think clients are really starting to focus the conversation on fund tokenization there. Dubai and the UAE, right? That's been another real area of interest and focus for clients. But, and I hate to say this, maybe because I'm biased because I live in the US, but over the last 6 months, it's game on in America, right? People see this being the crypto capital of the world with a high level of interest in one, moving back here, but two, like investing in building crypto products here. So that's what we're seeing among our client base.
Nice. Well, I found this super insightful. Dalton, what else? Do you have any questions?
You said you've got 10 engagements going on right now, but as far as like kind of the pipeline and conversations you guys are having, is that pretty active, or are folks just kind of coming up every once in a while, or do you guys like constantly churning through like conversations with folks that are interested or getting interested? I know it sounds like your sweet spot's like before a fund kicks off. I don't know how often that happens, or how you get involved there, but like what is that interest looking like for you guys? Like, is that going up? Is that going down? Is it staying steady?
So for us, the pipeline has definitely re-engaged pretty significantly. So for us, we've established a very strong like foundation in terms of our practice and our capabilities across the different client bases, where when they're comfortable and ready to start spending more money to invest in this, like we're the first call, or at least I hope so, given our traditional relationships and the work that we're doing in the crypto native space. So for us, it's, even though Bitcoin reaching all-time highs, I think the altcoin market, which a lot of these crypto native funds are focused on, have not necessarily come back in that way. So there is still that lag in terms of them getting more comfortable with the position that they're in the fund performance, to then have more capital to allocate towards projects to invest internally in their operating model. So I think the conversations are really strong. The pipeline's there. It's just, I think that's the last kind of checkbox we need to really gain more traction in that channel. I think on the traditional asset management side, similar story, where a lot of clients are actively working on products in the background to bring to market. And it's, how do we help them do that? But then once we get the go ahead to actually really bring this to market, or like our C-suite feels comfortable with it, it's time for us to engage and expedite our efforts here. So that's how I'm seeing our practice unfold at the moment. But I think we're really well positioned. I think there's a big gap in the market to provide that traditional consulting service to these types of firms, and I just don't think firms, one, have had great experiences working with consultants in the past, which always make them a bit edgy in terms of engaging with us. But once they see the ability that we have to get very hands-on with clients, know the industry, but also have hands-on experience in digital assets, I think it's a really unique offering in the market.
Yeah, no. One thing that we've looked at is that a lot of the funds out there, whether it's the crypto fund, whether it's their particular strategy or whether it's just fundraising has been tough, like they're just not large enough to be able to afford a consulting engagement. A vast majority of these funds are low tens of millions if they're a medium-sized fund in the space, or single-digit millions, and they don't have the cash unless they've been seated comfortably to engage with a firm like that. So you really, I guess, have to wait for it to mature and for maybe even some consolidation in the funds for them to be able to start engaging with the consultants like you would see from $100 million, $1 billion AUM group on the TradFi side.
100%. I think we're doing a few things there. One, we're building foundational relationships with some of the smaller ticket AUM size firms that we think will probably scale pretty successfully. So we're investing that relationship now for something 3 to 5 years down the line.
Yeah,
that's one. Two, I think we're also looking at different ways of engaging with clients, as opposed to just like you pay us cash for a certain amount of time and we'll do this work for you. I think we can get pretty creative in terms of how we partner with clients to do that. Mm-hmm. The question always then becomes, it's always less expensive to hire a consulting firm in the long term as opposed to hiring full-time employees.
Right.
And funds also don't want to give up equity in their funds necessarily
Right.
because they believe in the trajectory of where these products are going. So it's always that type of conversation, but we can get pretty creative in how we work with clients. And then lastly, I mean, I see a ton of convergence in terms of traditional asset managers in the future who have
Right.
missed the boat here,
Right.
that don't want to start from scratch and build up capabilities. They'd much rather acquire a crypto native fund with a track record and an LP base.
Right.
So for us, naturally, that makes a lot of sense for us to get involved there, where it's due diligence on that front
Right.
with the landscape that we know in the crypto native community. And then ultimately, maybe we have a relationship with a crypto native fund that gets acquired by a large traditional asset
Right.
manager that we don't know and we don't have a
Right.
relationship with, right? So I think we're playing a little bit of the long game for our
Yeah.
practice, which I don't. I need to take a step back sometimes and realize how early we are. Even doesn't
Right.
it doesn't feel how early we are, but yeah, when I have conversations with traditional institutional investors, it's some of them aren't even thinking about this yet, and to me, like and I'm sure you guys do too. Like it's all I look at all day, every day.
Yeah.
So it's good to bring that to perspective sometimes.
Yeah, no, that's a great view. I think it is a long game for you all, and that's a great way to play it. It makes a lot of sense. Yeah, I was just curious because we've approached similar opportunities, and it's who's going to pay for it, because it's you got a couple of big funds, and then you have a lot of people that are still trying to figure it out, and um, it's interesting to see who's out there spending money to improve and engage with groups like yourself.
Yeah, I mean, it always helps higher ticket AUM.
Right.
That's been where we've been most successful. I
Yeah.
think as we get down the tiers of from an AUM perspective, we always have a bit more friction. But I think those clients are really appreciative of being able to work with consultants that have worked
Right.
with the largest traditional managers. And for us, right, we can get pretty lean and nimble in terms of the team sizes we deploy, right? It's not us throwing bodies at the problem, it's throwing the right
Right.
people at the problem and working and partnering with them to deliver. So yeah, like I said, I think it's going to be tough for those lower sized AUM funds to get comfortable with paying consulting like fees for engagements like this. But I think there's an opportunity probably for both of us to get creative about like that revenue model and how we can share in the success of our clients as opposed to just getting cash for our time.
Yeah, have you guys thought about having kind of like a starter pack, kind of like out of the box recommendation service of like these are best practices, this is kind of what we recommend everybody get started with, or are they all really unique enough to need those standalone engagements?
So for us, I mean, we have a standard approach of how we would do due diligence and review operating models for clients, but we very much look to tailor that based on the client that we're working with and unique challenges they have and the types of products they have and their internal expertise. So we have our standard playbook of depending on the type of client and size of the firm and the complexity and the scope of the engagement, it could be a 10 to 12 week review. But
Right.
my recommendation to a client is not always going to be the same.
Right.
And we really try. We have accelerators and a lot of pre-built work that we could deploy for clients. But it's let's make this the right one for you, and let's
Right.
move to market the operating model that makes the most sense for you, not just what everyone's doing in the industry.
Yep.
What everyone is doing in the industry is helpful and informative, but it's not necessarily always the right option for our clients. So I
Right.
think that's another differentiator for us where it's like we really try to tailor the approach and the deliverable and the outcome to the client, which I guess has been a unique one in the market.
Awesome. Well, I mean, this has been super insightful, Christian. Dalton, did you have anything else before?
No, not at this point. That's super interesting.
Christian, any closing thoughts?
No, one, I very much appreciate you guys having me on. It's a podcast that I followed for a while, so it's an honor to be on and talk about this with you guys. I'm excited to see what we can do together in this market. I really do think the next 12 months are going to be historical for us in the asset class. We're going to look back and say, I it we were part of like a very unique part of history. So I'm super excited to see what comes and hopefully being able to collaborate together on some really powerful things.
I agree.
Yeah, I love it. Well, Christian, thank you for joining us, and yeah, I'm looking forward to continue the conversation as well.